Hey everyone, Mortgage Nerd here. Want to give you a quick rate update. Yesterday, June 16th, in the Fed meeting, the Fed announced that inflation is much higher than they anticipated. They were looking at inflation to be around 2%. Then they came out saying it's going to be in the threes. And some reports are showing that inflation is up at 6% year over year from last year. So this is something that a lot of us expected. I've been talking about. It's part of why I like cryptocurrency and Bitcoin, but also just it's not good for our country to be pumping out so much free money when people don't want to go back to work because they're getting all this money, and it just doesn't make any sense anymore. I understand a year ago, but now we need to stop this massive printing of money, and the damage is done. Inflation is here. We might see some worse inflation, um, but here's the effect on mortgage rates. So this candle right here, these are the mortgage bonds. You can see up here today's positive, today's going up. So when this goes up, when the mortgage bonds are going up, that means that the mortgage rates are going down. Inversely, the 10-year treasury, when this is going down as it is today, then rates are going down with it. Yesterday, this was around 146 or so. We'll get to that in a second. So this was about zero yesterday. It was around here until 220 or so. And then all of a sudden it dropped 20 basis points. I immediately started jumping into lock rates. A couple clients I could not lock. One in particular was a 15-year mortgage. Rate was 2.25. That's a 2.3% APR. Well, guess what? Only 2 hours later, because I couldn't lock for 2 hours as this thing was dropping, they had it unavailable to lock. 2 hours later, the rate is 2.5 with the 2.55 APR. So a whole quarter percent higher than what we were going to try to lock it at. And just so you know, I didn't lock because there's a lot of ifs in that scenario, a lot of question marks. How long is this going to take to close? And you don't want to lock too early because then you have extensions and penalties and all this stuff. So back to these rates. This drop was huge. I said, listen, let's not lock you today because usually when you see big moves, there's a counter bounce. Look, big moves. Yeah, it was 3 days in a row, came and bounced. And what happens is when these rates swing so significantly, the lenders kind of overcompensate. So they make their rates a little bit worse. Right down here, the rate was a little bit worse at the end of the day than it was starting here. And it kind of eased back because it said, okay, since it's not continuing this way, we're going to ease up on our rates. Not only that, the fact that this news came out and you see all this white, all this clear area, there's no resistance levels. These are all resistance levels up here. So since there was no resistance or support, it just fell so easily, so easily. So let's look at the 10-year treasury. Now remember, 10-year treasury, as that goes up, rates go up. As it goes down, rates go down. So we hit a good low point here last week, July 11th. And then here we are this week. It was rising a little bit, rising a little bit. And then, of course, yesterday, boom, broke through that level of resistance. But the good thing is we have a triple level of resistance. We have two moving day averages and this Fibonacci level here. So it's going to be very difficult to see this breakthrough, just like we had that support over on the mortgage bonds. So that's kind of good. At least we can stay in this range, maybe, hopefully. But, this is what's going on with rates. The lowest rates that we had in history really was middle of February. That was the end of it. They went up from there. They come back down, but not all the way. So, lowest rates in history, these low threes, high twos. I gave you an example of a 15-year mortgage. VA mortgages are in the twos still. They're not going to be here forever. So if you haven't refied and you're looking to refinance, you need to do it. There's no reason to keep waiting and delaying and all of that. So that's pretty much it. You're going to get to see my glasses today. Maybe that's a good thing. Mortgage Nerd out. Thanks.